Vietnam is one of the fastest growing economies in Asia. With strong GDP growth, a young population, and a rapidly expanding middle class, it's becoming an increasingly attractive destination for investors. But if you're a foreign citizen, accessing these opportunities isn't always straightforward. In this video, we'll break down the main ways you can invest in Vietnam and the pros and cons of each one. Everywhere you look in Vietnam, you can see change: new buildings, busy streets, and thriving businesses. Over the past decade, GDP growth has averaged between 6 and 7%, with the government targeting 8% in 2025. The median age is just under 33, compared to 40 in China and 48 in Japan, and urbanization is rising, with more people moving into cities each year. This combination of youth, growth, and urban development is what makes Vietnam so exciting for long-term investors. The most direct way to invest in Vietnam is by opening a local brokerage account. If you're based in Vietnam or willing to go through a lot of paperwork, this gives you access to local stocks on the Ho Chi Minh and Hanoi exchanges. You can pick individual companies in sectors like real estate, banking, and consumer goods, often at lower fees than through foreign funds. But setting up an account requires a Vietnamese bank account, a trading code, and notarized documentation. It's best for serious investors willing to navigate bureaucracy and possible language barriers that might occur in the process. For most foreign investors, a simpler option is to buy a Vietnam-focused ETF. For US investors, the VanEck Vietnam ETF, ticker VNM, and the Global X MSCI Vietnam ETF, ticker VNAM, both give you exposure to Vietnamese companies. Outside the US, two common Hong Kong listed ETFs are the X-Trackers FTSE Vietnam Swap UCITS ETF and the CSOP FTSE Vietnam 30 ETF. ETFs are easier to buy, but may underperform local indices due to tracking errors and ownership limitations. Foreigners can also buy property in Vietnam. This is true under certain conditions. You can't own the land, but you can own the buildings on it through leaseholds, typically 50 to 70 years, with options to renew. Foreign buyers can own up to 30% of units in a condo building or 10% of houses in a residential project. Cities like Ho Chi Minh City, Hanoi, and Da Nang have steadily seen real estate growth driven by urbanization and a rising middle class. Most transactions for foreigners are cash deals, as mortgages can be complicated and require large down payments, although they are available for those who want them. Vietnam's startup scene is also fast growing, especially in fintech, e-commerce, and education. Angel investing here can offer big rewards, but it's high risk and often relies on personal networks and local knowledge. Many deals aren't advertised publicly, and legal protections for small investors are still developing. If you have strong connections in Vietnam or a long-term view, this can be worth exploring. If not, it's better to approach this with caution. Vietnam offers many exciting opportunities for investors, but it's not a plug-and-play market. Whether you choose stocks, real estate, or startups, success often depends on patience, local insight, and a willingness to work through regulations. If you found this video useful, subscribe to our channel for more insights on Vietnam and other emerging market opportunities.